Something bizarre happened in the oil markets on Monday. Prices fell so much that some traders paid buyers to take oil off their hands. The price of the main U.S. oil benchmark fell more than $50 a barrel to end the day about $30 below zero, the first time oil prices have ever turned negative. Such an eye-popping slide is the result of a quirk in the oil market, but it underscores the industry's disarray as the coronavirus pandemic decimates the world economy. Demand for oil is collapsing, and despite a deal by Saudi Arabia, Russia and other nations to cut production, the world is running out of places to put all the oil the industry keeps pumping out, about 100 million barrels a day. At the start of the year, oil sold for over $60 a barrel, but by Friday it hit about $20. Prices went negative, meaning that anyone trying to sell a barrel would have to pay a buyer $30, in part because of the way oil is traded. Futures contracts that require buyers to take possession of oil in May are expiring on Tuesday, and nobody wanted the oil because there was no place to store it. Contracts for June delivery were still trading for about $22 a barrel, down 16% for the day. If you are a producer, your market has disappeared, and if you don't have access to storage you are out of luck, said Aaron Brady, Vice President for Energy Oil Market Services at IHS Markit, a research and consulting firm. The system is seizing up. Refineries are unwilling to turn oil into gasoline, diesel and other products because so few people are commuting or taking airplane flights, and international trade has slowed sharply. Oil is already being stored on barges and in any nook and cranny companies can find. One of the better parts of the oil business these days is owning storage tankers. Traders have sent prices up and down on speculation, hopes, tweets and wishful thinking, said Louise Dickson, an oil markets analyst at Rystad Energy, a research and consulting firm. But now reality is sinking in. The world has an estimated storage capacity for 6.8 billion barrels, and nearly 60% is filled, according to energy experts. Some of the oil glut is evident in Cushing, Okla, a critical storage hub where the oil that trades on the U futures market is delivered. With a capacity to hold 80 million barrels of oil, Cushing has only 21 million barrels of free storage left, according to Rystad Energy, or less than 2 days of American production. As recently as February, Cushing was not even up to 50%. Now, experts say it will be filled to the brim in May. Storage is almost completely filled in the Caribbean and South Africa, and Angola, Brazil and Nigeria may run out of warehousing capacity within days. In his news briefing on Monday, President Trump said the government was looking to put as much as 75 million barrels into the Strategic Petroleum Reserve, which is used as a buffer during crises and was created after the 1973-1974 oil embargo.